So here I got the 5-day chart, 5-minute candles for SUNW, Sunworks Inc. So this represents last week's price action, and it's pretty clear why we're talking about it. It made a move from the 70 cents range, spiked here all the way to over 450, dumped all the way back down, formed a uptrend as we can see. Ultimately hit over $8 briefly before coming back down under $2 on Friday, right? So very, very volatile. So let's talk about the general reason why it moved and everything. So we all know Tesla, the workhorses, all these electric vehicle companies have been very hot. So that's the first reason, right? The electrical vehicle sector being hot. Then all of a sudden this company called SPY came out and said we're coming out with into the electrical vehicle industry, and everyone noticed. I mean, everyone knows what happened there. It jumped from under 2 to over 40. So when we have these types of moves, like the BPTHs, these ones right here, this will be a legendary run that people will always remember. People will now chase moves because maybe someone bought it $4 and they sold it $5, and they watched it go to 40, and they're just sat there all day and weekend thinking, damn, had I held. People now will chase anything that's moving and hot, thinking this will be the next one, which causes a lot of irrational moves. So plus on top of that, how the market conditions have been in the last couple months, and all the new money and day traders, just a crazy situation of just chasers in this market. So I mean, after this happened, for the next day or two, every day, I mean, the pre-market, I think every pre-market top pre-market gainer was the energy play. And as we all know, as penny stock traders, SNW has always been a heavy pump and dumper. So every time that sector gets hot, people pump this one, as well as OPTT, just one of those ones, because as we go back and we look at their latest 10Q, look, as of August 6, 2020, there was 16.6 million shares. So when you're dealing with a stock with 16.6 million shares and it's 70 cents, you got a market cap of a ridiculously low level, so any sort of volume is really easy to move. So it's low float, low market cap, and a lot of time low volume, so people will load it and pump it intraday. So what happens is, I think it's a situation on top of that is, which we're going to go deeper into over here. They have a merger with the pet company, which is already done, and a lot of people probably aren't going to even dive into that. So what I think what happened was they got some momentum. Shorts thought, what the hell? They looked through this merger. They know the fundamentals better than the day traders, and they got squeezed. Here they come back, get for revengeance, but ultimately they got squeezed again. So but the thing is, the day traders and these momentum traders aren't going to last as long as the shorts that know the fundamentals and about the merger details. So what I'm playing this next week as one of my favorite plays, a stock that made a crazy move. A lot of people are going to be in love. They're going to keep trying to buy the bounce or average down. Some poor souls bought up here and didn't sell. Someone's probably sitting out there with a $7 average, a $5 average, a $4 average. Ultimately, I believe this is going to go down under $1, whether it takes a week or two. I think this will be back down to around 80 cents. We'll discuss that later. But on these plays that have made irrational, crazy moves to the upside, there'll be a lot of nice bounces. So I'll be scalping bounces on the downside, my specialty. So here's how I'm going to play it. Or actually, let's go over let's just go over the price action first. So I'm trying to do this the best visually the best way for people. So let me know in the comments if this one's better or how I can do better or whatnot. So I'm thinking is, here I got all my support and my resistance levels I'm watching. So first of all, look, it broke under the $2 range on Friday. So that's a weak sign already, even though it was in after hours. But the part I'm looking for is this right here, this 170. There's 180, there's a little end of this candle, but more importantly, there's 3 right here. So I'm thinking this 170 possibly for a bounce. maybe back to 180 or 190 or maybe back up to 2. I'll look for a 180 bounce. I mean a 170 bounce. But real tight risk. If it breaks under that 170, I'm not going to go down with it. So after I go over, I'm going to get rid of the thing. So 170 is the first one I'm watching. After that, this is more of a definite support level for me. This 150. I'll go in with more size around 150 if I get it. And then I'll be looking for, after the 150, I'll be looking for the support level that becomes resistance once it breaks. So that if I get in 150, my first price target will be that 170. Right? If 150 breaks, I'll get in at 130. I'll be looking for a bounce off 130, and then my price target first would be 150, then 170. See, because support becomes resistance once it's broken. So after that 130 gets broken, I'm chilling back, and I'm not going to load until the chart shows me 105 as support. That's so close to the $1 thing. I probably wouldn't load at 105. I'd probably almost wait for it to break under 5. I mean, if it gets to 105, I'll see if it tests 1 first, because I don't want to go down with that. Unless you're getting in at 105 and stopping out at 103 or something. But so that 105 $1 range. If it goes to 105 and 104 and it stays there for a while, I'm not gonna. I'll load. That's why I'm bringing it up. I won't wait exactly for $1. I'm not gonna miss it. So 105 $1. I'll be looking for a bounce to what was it, 130. Under $1, I'm looking for a bounce off the 90, the 92-ish range. 92, 91, 93. It's not an exact science right here, but around 92, I'll be looking for a bounce back to $1. So it's 10% nearly, right? And these can happen fast. That's what I'm talking about. People say, "Oh, you're only getting a couple cents. That's $1." So on each one of these, that's a potential 10% bounce, and we've gone over 4 of them already, right? That's 40%. And these could be quick in and out. When I trade penny stocks, I think risk as not only in how many days, but how many hours I'm holding these things. If I get in at the right time and out in a few minutes, that's how I like to control my risk on top of price action risk management. It's not sitting in these things for a long time. Catch some sort of weird dump. So under 92 cents, 80 cents. I'll look for a bounce of the 80 cents. I think that ultimately where it's going to head up at the end of the week or maybe 2 or so. I think it's going to be back in the 80 cents, 75 cents range. But they'll be bouncing on the way. On the upside, say we get in at I get this 170 load, one of these 150 loads, and it bounces and it keeps pushing. The first one I'd be looking for after above this 170, my price would be at $2. It'll be heavy at $2. After that, I'll be looking for, it could be 215ish, 215ish will be a little heavy, 230ish. Then 250, then 275, and then 3. And I really don't think it's going to go much higher than that. If it did, there'll be a lot of resistance here around 350. But more likely, I think this is going to fade, offer bounces on the way down. I won't chase it pre-market on Monday. If it's, say we wake up, it's 210, 220, I'll definitely wait for the morning panic for it to go back under $2 as it showed in after hours, or wait for the end of the day or midday or even lunchtime for it to dump under the $2 and test that 170 range, ideally 150. So that's how I'm looking at it from a price action perspective. And here's the merger. So check this out. On August 10th, Sunworks entered an agreement to the plan of a merger with the company the Peck Company Holdings, right? So here we go. Your SUNW shares will be converted into the right to receive 185 shares of the parent company stock, right? So roughly 1/5, just to make it easy, right? Let's just say you're getting 1/5 of PEC. Where's PEC at right now? $5. It closed at 5, even though that was at the very end of the day very similar action to SUNW. That would put SUNW at $1, or it'd put PEC at what, 10? And from where SUNW's been the last year, when this merger happened, it was under the $1. So I'm pretty sure that SUNW is going to be the one going down, not PEC going up. As well as I know a lot of shorts that religiously short SUNW, and that's what caused this initial spike in the first place, them getting squeezed. Now they're going to come back, get their money back, and they're going to drop it under that $1. So I'm not trying to bash the stock. I'm just trying to say don't fall in love with this stock, especially if you haven't gone into the SEC filings of this merger. Another last point I want to go over this is SUNW. Let's go over the daily candle in the 1 year. I mean, to show you why. We went over, they had 16.5 million shares. Previous highest volume up to this last week's action was 75 million shares. And here you go, 110 the first day, and followed by 267 million shares getting traded in the day. So I mean, over 10, the float's getting rotated like, I don't know, 15 times, over 15 times. But also note, look at let's go back to the 100-day on the daily candle to get a better price. Look at the candles. So it spiked up, couldn't hold up here, closed here, overnighted, couldn't hold again. And let's go over the supports and compare the ones I have from the price action recently to the longer term look to see where it came from. There's the 150. There's that 130. See the previous support. And then here's the 105 to $1. See the top of this candle to the top of that candle. 105 right here. $1 to around here. So that's where it'll be a little heavy from before, back in July. 92 cents. Let's see if that shows on this one. So yep, top of this candle as well as here. So it was previous resistance. 80 cents. There we go. Right there. So it was previous resistance here as well as here. So that could act as support. So that's how you can match up your support and your resistance from different time frames and make sure they're real solid. And which ones are more solid will show up in multiple time frames, not just like last week's. It's last week's as well as a couple months ago, possibly longer. So don't fall in love with this stock, and let's have fun scalping the bottoms on the bounces and the panics and getting out on as soon as we can with profits.